Assalamualaikum, I am Saleha binti Muhammad Anas and I would like to present about the topic of Warren Buffett, how much people should invest in 2021. Firstly, I would like to talk about the introduction of Warren Buffett. Warren Buffett had an estimated net worth of $8.3 billion in 1993, according to the Forbes list of America's richest people. Buffett is the only one of the 99% of the list who made his fortune through the stock market. Buffett earned his bachelor degree at the University of Nebraska. Buffett joined the partnership in 1965, cashing out a personal interest of $25 million. Warren Buffett used his money to buy a majority stake in Berkshire's cotton manufacturing, a well-known but suffering textile manufacturer. In 1967, this firm combined with Hathaway Manufacturing and purchased stakes in two insurance companies. Berkshire Hathaway was formed from the merger. Buffett started a limited investment firm with the information he had gained from Graham, the financial backing of family and friends, and $100 of his own money. Next is how does Warren Buffett choose his stock. The first one is value investing when selecting stock. When it comes to stock equations, Berkshire has a long-standing and transparent strategy. The firm should have stable earnings, a high return on equity (ROE), competence management, and a reasonable price. Understanding a company financial, particularly formal records such as profit and income statement, is necessary for determining intrinsic value. The second one is the company performance. Companies that have provided a good and acceptable return on equity for a long time are more attractive than those that have only provided decent return for a short time. The greater the number of years with a positive return on investment, the better. Thirdly, how much debt does the business have? A high debt-to-equity ratio should raise red flag since more of a company earning will go towards debt payment, especially if growth is solely based on taking on additional debt. Buffett encouraged profit growth to originate from the equity of shareholders. The fourth is about the profit margin of the firms. Buffett seeks out firms with a high profit margin, particularly if profit margins are increasing. He evaluates the profit margin across multiple years to dismiss short-term change, much as he does with ROE. The fifth is a factor to consider is how distinctive the company products are. Firms that generate items that can be readily replaceable, according to Buffett, are risky than companies that give more distinctive offers. So the sixth issue is how much of a discount are shares now selling at. This is the essence of value investing, identifying firms with strong fundamentals that are trading at a discount to where they should be. The larger the discount, the more profit potential. Other than that, I would like to talk about the Warren Buffett way. The first one is never follow the day-to-day fluctuations of the stock market. A stock market exists primarily to enable the purchase and sale of shares. When an investor tries to use the market to forecast future price, they run into difficulties. Besides, don't try and analyze or worry about the general economy. The issue is that some investors start with an economic assumption about the economic path and only invest in equities that meet their model. Prediction become both self-fulfilling and remitted in this sense. A better strategy is to purchase a company that has a genuine chance of growing, regardless of whether the company is booming or declining. More than that is buy a business, not its stock. An investor should seek for a firm that has well understood business processes. Favorable long-term prospect is run by honest and competent individual and is offered at a reasonable price. The following factor influence the choice to purchase a business. The first one is the business, management, financial and market tenets. So next is about how people invest in overvalued stock market. Buffett also likes to concentrate on valuation over the prospect of quick growth. People continue to buy companies that are on tier despite the fact that they are overvalued, expecting that the quick growth would compensate for the overvaluation. Buffett, on the other hand, advises focusing on stocks that are selling at a discount to their true worth. People that have a long-term perspective of assets are less concerned by short-term market swings. Warren Buffett advised to invest in successful businesses and the stock will follow. About how people invest in high inflation, Warren Buffett said that the greatest firm to buy is one that doesn't require constant reinvestment since the cost of doing to rises as the value of the dollar falls. The greatest business to buy during inflation are those that you acquire whose products are in high demand even if the company has to hike price. Last but not least is about how people invest in interest rate hike. Warren Buffett and his business Berkshire Hathaway, which both know how to beat the market, are among the few who know how to play challenging market circumstances. In a rising rate environment, here are the 3 Buffett stocks to consider. The first one is Mastercard, enables financial transactions in more than 200 countries as one of the world's leading payment rails. Mastercard network processed $7.7 trillion in transactions in 2021 with nearly 2.6 billion cards in circulation. The second one is a Bank of America is a financial institution based in the United States. Few institutions will gain as much as Bank of America, the second largest bank in the United States by assets. Okay, the last one is a Berkshire Hathaway is conglomerate that owns a Berkshire Hathaway, the last name on the list in Berkshire Hathaway, a conglomerate that operates a number of businesses under a Berkshire brand in a variety of industries, including energy, insurance, and real estate. That's all for me. Thank you.